I can't hear you. Good morning, everyone. That's better. Good morning, Mr. President and Chairman of Council, members of Council, and the patrons, members of EXCO, our distinguished guest speaker, esteemed moderator, valued sponsors and partners, captains of industry, distinguished guests, ladies and gentlemen. On behalf of the Nigerian-British Chamber of Commerce, I warmly welcome you to our Nbcc Construction and Real Estate Outlook for 2026. This year's event is themed Navigating Reforms, Driving Resilience, Tax, Insurance, and the Future of Nigeria's Construction and Real Estate Sector in 2026. My name is Odun Ayojo. I'm the chairman of the Construction and Real Estate Committee of Nigeria-British Chamber of Commerce. And it is my honor and privilege to guide us through today's session. To formally commence our proceedings today, may I respectfully request that we rise for the national anthems of the Federal Republic of Nigeria and the United Kingdom.
Nigeria, we hail thee, our own dear native land. Though tribes of medieval, in brotherhood we stand. Nigerians old and proud to serve our sovereign motherland.
This year's event is being organized in partnership with FIAPSI, the International Federation of Real Estate. So please let's give them a round of applause. Distinguished guests, the Construction and Real Estate Outlook was conceived as a strategic platform for forward-looking dialogue, one that brings together policymakers, regulators, financiers, developers, insurers, and investors to interrogate the issues shaping our sector. Today's theme, Navigating Reforms, Driving Resilience, Tax, Insurance, and the Future of Nigeria's Construction and Real Estate Sector in 2026 is not only timely, it is also urgent. Nigeria is undergoing significant fiscal, regulatory, and institutional reforms. Tax frameworks are evolving, insurance recapitalization, and compliance standards are being strengthened. Public finance pressures are redefining revenue strategies, and at the same time, our construction and real estate sector continues to carry enormous responsibility for infrastructure expansion, housing delivery, urban renewal, and economic stimulation. In such a landscape, the question is no longer whether reforms will happen. They are already here. And the question is, how do we navigate them wisely? And how do we align compliance with competitiveness. The construction and real estate sector remains one of the largest employers of labor and a major contributor to national GDP. Yet it faces persistent challenges. There are multiplicity of taxes and regulatory overlaps, rising construction costs and foreign exchange pressures, limited access to long-term financing, insurance penetration gaps, housing affordability constraints, and so on and so forth. When properly structured, tax policies should incentivize development, not discourage it. It should stimulate investment in affordable housing, encourage green and sustainable building practices, and provide clarity for long-term infrastructure financing. Insurance, on the other hand, is the backbone of risk management and our industry, from contractor or finance risk coverage to professional indemnity, from asset protection to infrastructure risk pooling. A strong insurance framework enhances bankability and investor confidence. We are deeply honored to have as our guest speaker today, Honorable Moruf Akindele Fatai, who is the Honorable Commissioner for Housing in Lagos State. And we also have as our guest speaker, Dr. Biodun Adedipe, who is the founder and chief consultant of B. Adedipe Associates. A round of applause for them. At this point in time, I would like to welcome our president and chairman of council, Prince Abimbola Olashere, to come and give his welcome address. Please, a round of applause for him.
Thank you very much. Deputy Presidents of Nbcc, Deputy President Akin Oshitoki, Deputy President Nnamdi Okonkwo, our past patron, Ashwaju Michael Olawale Cole, other council members and ESCO members, our distinguished guests, policymakers, captains of industry, partners, and other members of the Nbcc. It is indeed my distinct pleasure to welcome you to the Nbcc Construction and Real Estate Outlook for 2026, which is themed Navigating Reforms, Driving Resilience, Tax, Insurance, and the Future of Nigeria's Construction and Real Estate Sector. Our theme today captures the reality before us. Nigeria is indeed undergoing significant fiscal and regulatory reforms. Tax structures are evolving, insurance frameworks are strengthening, and these changes will shape how we finance, build, and invest in the future. For the construction and real estate sector, which is a critical driver of infrastructure, housing, and employment, these reforms present both challenges and opportunities. To navigate successfully, we must ensure that tax policy encourages development rather than constrain it. Insurance reform must strengthen risk management and improve investor confidence. Public and private sector collaboration must remain strong and strategic. We are indeed honored to have as our special guest of honor, we are still expecting him, Honorable Moruf Akindele Fatai, the Honorable Commissioner for Housing in Lagos State, whose work in advancing housing delivery and urban development is central to this conversation. We are equally privileged to have as our keynote speaker, Dr. Biodun Adedipe, founder and chief consultant of B. Adedipe Associates, whose macroeconomic expertise will provide valuable insights into the reform landscape and its implications for sustainable growth. We acknowledge the important role of the Federation of International Real Estate, FERC Nigeria, in promoting best practices and acknowledge the exchange in the real sector. And I think in particular, they deserve a round of applause. They've always been with us every year for the past couple of years. Our panelists today bring practical and expert perspectives to this discussion. We have Mr. Gbenga Ismail, Mr. Kenneth Erikume, and Mrs. Abimbola Onokumaya. Guiding the conversation today is our moderator, Mr. Dolapo Midire, the founder and CEO of Estate Intel. whose insights and experience in real estate market intelligence will ensure a rich and engaging discussion. We are always grateful to our sponsors, Eco Development Company, Knight Frank Nigeria, STB Mortgage, UPDC, Alithia Capital, Land and Grant for their support, because alongside the commitment of our members and our partners, they all act as a bridge for bilateral trade and sustainable development. Ladies and gentlemen, the future of Nigeria's construction and real estate sector will depend on the quality of our collaboration, on our ability to turn reform into resilience. I therefore encourage all stakeholders to engage actively, share insights, and contribute to practical solutions that will shape our industry for 2026 and beyond. On this note, I thank you once again for your presence and your support for the Nigerian-British Chamber of Commerce, and I wish everybody a productive and insightful session. Thank you very much.
Another round of applause for our President and Chairman of Council, Nigerian-British Chamber of Commerce. So at this time, we would like to hear from a distinguished personality. Like I said before, this program is in partnership with FIAPSI and the World President of FIAPSI, in the person of Mr. Antonio Campagnoli, is going to be giving us a virtual welcome address. So, media, if you can just bring him up.
Honorable Commissioner for Housing, Lagos State, Mr. Moruf Akinderu Fatai, President of FIAPSI Nigeria, Mr. Akino Patola, President of FIAPSI Africa and Near East, Mr. Adele Adeni, Chapter Leadership and Officers, distinguished guests, ladies and gentlemen, I hope this message finds you well. It is a great pleasure for me to address on the occasion of Nbcc Construction and Real Estate Outlook 2026, an event that brings together the voices shaping the future of Nigeria built environment. I'm confident that this high-level industry-focused forum will provide valuable insights for the real estate developers, investors, construction professionals, policymakers, and regulators, as well as professional advisors and the wider property community. At a time of reform and transformation, platforms such as this are essential to help the stakeholders better understand the road ahead and position themselves strategically for the year to come. Initiatives like today's event illustrate what FIAPSI distinguishes. The International Real Estate Federation, a truly global network grounded in a strong local engagement. Our chapters play a vital role in their respective markets by fostering dialogue, sharing expertise, and building meaningful bridges between public and private stakeholders. As FIAPSI World President, I am particularly proud of the leadership and commitment demonstrated by FIAPSI Nigeria through initiatives such as this. I wish you warmest greetings from Milan, Italy, and I wish you a most engaging and successful event. Thank you very much.
Applause louder. All the way from Milan. So we move on ahead to the reason why we are here is to listen from the experts and to ensure that we learn something about the reforms that are currently ongoing. So it's my pleasure to welcome Dr. Abiodun Adedipe. As we have said, he is the founder and the chief consultant of B. Adedipe, an associate with over 45 years postgraduate work and professional experience in university teaching, investment banking, project finance, management, financial consulting, as well as business, and non-for-profit organizations. A round of applause for Dr. Adedupe as he comes to the podium.
The President and Chairman of Council, the Council members, and let me rest on the already established protocols and say very good morning to you all, and also express my appreciation for being here to speak to the subject of the day, 2026 Economic Outlook, but in context of the committee organizing this event, that is construction and real estate. And I'll put this in context, and that goes this way, that there are common problems. Okay, that is the direction. All right, so if I can have the slides on the screen so we can quickly get into the business of the day. I think everybody can see my face there, so they don't need it on the screen. Okay, thank you very much. All right, so now the context is to underscore the common problems that I have observed across developing countries around the world. And there are 5 of them. Interestingly, the conversation today talks to 3 of them. And these are in the form of deficits. Across developing countries, there is food deficit, there is energy deficit, there is manufacturing deficit, there is infrastructure deficit, and also housing deficit. Now, we look therefore at construction and real estate. It speaks to 3 of those deficits. So, by the way I put this forward is this: for every organization to be relevant within such an environment, it's either you are directly working to bridge those gaps, or you are rendering services or products to those who bridge the gaps. So in which case, the relevance of your business is a function of the connection to this particular, deficits. So now, talking about the world we are in today, there's a very big difference, and I normally put it this way, between Trump 1.0 and Trump 2.0. And that difference goes simply this way. When COVID-19 came, and it was declared by the World Health Organization as a pandemic in March 2020, we began to talk about an acronym VUCA, where we say we are in a world where there's so much volatility, there's so much uncertainty, there's so much complexity, and then, of course, ambiguity. So we called it VUCA. But then, when that happened some 5 years ago, we also told ourselves that this is now the new normal. So when will the next normal come? And that next normal, what to be is character. And that is where we are today. So the next normal has come on us, and we call it Barney. Barney is to represent Trump 2.0. We are in an environment that is brittle, an environment where everyone is anxious, and that is why you look at Nigeria today. 2026 is a pre-election year, which we have been mapping in our firm since 1998. Every pre-election year in Nigeria, we map and then form an opinion as to what will likely happen when we enter the election year and how the election will impact the economy and business activities. So, but now, everyone is anxious. So, the beginning of 2026, there's so much intense business activities. There is so high intensity. But of course, it's also non-linear. Non-linear means you did something in 2025 that produced a fantastic outcome for your organization. But if you repeat it in 2026, you may not get up to half of what you achieved in 2025, which means the world you operate in now is non-linear. And of course, the final word there is incomprehensible. We then say we operate in a Barney environment, Trump 2.0. But that environment also has several disruptions. Now, the president, in his opening remark, made reference in passing to disruptions. what we did in our firm some 5 years ago was to now say, look, every time we are getting to the end of a year, we try to review what is happening globally and identify what we pick out as major disruptions to businesses. And that means anywhere you are in the world, no matter the geography, these are issues you have to worry about. And of course, we illustrated that in February 2022, when Russia invaded Ukraine. And then we discovered a reality of why business leaders cannot ignore whatever is happening anywhere around the world. Now, when that happened, there was a massive disruption to the supply of grains to the global market. And that made grains to become very, very expensive. In fact, the way I usually interpret it is that I woke up here in Nigeria and then they told me that the bread on my breakfast table is now more expensive. And I said, why? And I then was told, oh, because of the war taking place in Europe. And my question was, how can the war taking place in Europe make my breakfast bread to be expensive in Nigeria? And then came the issue of disruptions to supply chains. I said, okay, fine. Disruption to supply chains. But is it that Ukraine is systemic, the supply of grains to the world? And the answer came by yes. So I now said, okay, I'm a data person. So to what extent is that? Said 24.1% of the grains we consume in the world comes from Ukraine. So I became now sensitive to anything happening around the world. So September 2023, for the turn of India and rice, heavy monsoon rains in East Asia, rice plantations destroyed, now affecting the supply of rice to the global market. I then discovered again that India is systemic in the supply of rice to the global market. Not even Thailand, that is normally used as the reference benchmark in the rice market globally. I discovered that India accounted for 40.1% of the rice we consume in the entire world. 40.1%. So all the Indian government did was place a restriction on the export of non-basmati rice. Then the price of rice went up through the roof everywhere in the world, not just in Nigeria. So that made me even more sensitive to developments around the world. So we then said for business leaders in 2026, Ukraine war is still an issue. Invasion of Venezuela is the latest addition. And of course, we know what that means. Trump 2.0 went into Venezuela, grabbed the head of government, and then turned around later and said, look, any barrel of crude oil we produce there, whatever the proceeds of the sale, we share 50-50 between the US and Venezuela. We are still watching. Okay, macroeconomic instability is still an issue. Of course, playing out in the way investors globally move their funds in response to what the Fed is doing in the US. Of course, social divisiveness, what social media is doing, that one came into conversation in March 2023, when Silicon Valley Bank collapsed like a pack of cards. Then I probed that and discovered that the problem came from its balance sheet. Now, it had more deposits than loans. And so the difference, it invested massively in bonds. So when the Fed began normalization, bond prices, of course, went, and say they became toxic. Bonds became toxic. And so it had a gap in his book, and he needed $5 billion fresh equity to bridge the gap. Now they opened the bookmaking. Everything was done successfully. Book building, everything went well. Then the chairman of Fed, Powell, gave a media interview and said, with the way inflation is behaving in the US, the Fed is unlikely to reduce interest rate. Rather than do that, they will likely take rates up. And we know the inverse relationship between interest rate movements and price of bonds. So as that happened, one of the PEs, that private equities, that was part of book building said, wait a minute, it will make sense for me to put my money in SVB. Because these are people's money, investors' money. What it means is that the gap in this book will become wider. That bank will need more than $5 billion. So I'm not going to put any money there any longer. A second P, they had a conversation, said, I'm not doing the same. But here now is the issue for you and I. Within 48 hours, that conversation was put on social media. And then the book's SVB was building collapsed. And within that period, the Wednesday to Friday, FDIC moved in and that bank was gone. So we then brought something out and said, for every business leader social media risk has become an element on your risk register. That means in your organization, there must be someone who is tracking the footprint of your organization across social media platforms. So that when anything negative comes up, you want to ensure you deal with it very quickly. So that became also an issue for business leaders globally. Of course, we know what is happening with AI, right? I will come to that later when I speak to how to build resilience into your organization in the light of these disruptions. Of course, geopolitics that our president made reference to, climate change, that the case of, India I mentioned, BRICS Plus, which of course is where Nigeria again featured. Nigeria became a partner member of BRICS Plus in October 2024. And when that happened, Trump 2.0 came back and said, well, when I was campaigning, I made a promise that every country in the world, I'm going to slam with tariffs, minimum 10%. So Nigeria was among the 10%, or let me call it the 10%ers, so to say. Okay? But when we joined BRICS Plus as partner country, Trump turned around and said, I'm going to raise your tariff from 10 to 14%. And when he raised it to 14%, as outsiders of government, I sent word to my friends there. I said, look, don't react to this. Nigerian government should not make any statement, because you make a statement, the man will come back again with a bigger hammer. Let's look at data. Data shows clearly that Nigeria's export to the US is 92% hydrocarbons. And there are no tariffs on hydrocarbons. That means the impact of this increase from 10 to 14% is only on 8% of our export to the US. Don't worry your head about that. Let's focus more on the trade direction. All right? And then our government was silent about it. That's why there's no reprisal, no further action from Trump on that. Okay? Now, going beyond that, I now came to a point where I said, how about energy transition? A whole lot is happening within that space as well. And of course, political volatility. Elections are happening in several countries around the world this year. But there's one thing that is clear in the political space globally, and that is what I will call a distrust. Governments have lost trust globally. It's not just in Nigeria. It's all over the world. And so the way elections are going, therefore, is such that you cannot be too sure where the outcome will land. So all of this, of course, must be what we as business leaders must be sensitive to. But one question, in the light of this turbulence and disruptions, does your organization have a bridge that is strong enough to withstand the turbulence? And that bridge has three peculiarities. First is, and that is what resilience is about, that bridge is in terms of the design. That's number one. Secondly, in terms of its maintenance. And then the third one is its ability to withstand the turbulence. I will speak to that when I'm about wrapping up. Now, as Mr. Onayo said earlier on, we've seen a lot of issues within the Nigerian macroeconomic space. And I put it simply this way. In the last 34 months, we have seen massive macroeconomic reset and, of course, market reforms in various shapes. I put a slide here that shows a summary of them. Maybe because of my sister Bimbo here, I should have added Nira as well. So I will add that before I sign off on this deck of slides. Okay? Because Nira is also one of the, policy shifts in Nigeria in recent times. But there are so many. But oftentimes we make so much noise about two of them. First, subsidy removal, and then exchange rate unification. Yes, first subsidy removal, I'll just make this remark on that very quickly. Now, that saved Nigeria about $10.7 billion being stolen every year on account of first subsidy. But if you look at when this government came in, up until this February 2026, we have saved ourselves an estimated value of 37 trillion naira. On that account only, 37 trillion naira. Now, unified exchange rates, we know what that is. And now that has worked for us. I didn't like it at first when it came. I will confess openly. I didn't like it. But when later, my mind as an economist was that, this is a new way of talking about devaluation of the currency. the textbook argument. You devalue a currency where you want to make your exports cheaper. And so if your exports are cheaper, you sell more to the rest of the world. That's okay. What do we export? Largely hydrocarbons, on the average between 89, 90, 91, maximum 92% over the last 40 years. Okay? So the question now is, if we get value from devaluation, it can only be on anything between 8 and maximum 11, 12% of your exports. So what impact will that make? Because hydrocarbons, by the way, you have no control over the volume you sell as a member of OPEC Plus. Secondly, you have no control over the price. The market determines that. So in which case, the impact of devaluation will only be felt on the portion of your non-oil export. That was my argument, textbook. But then the reality has played out differently, because we also know that within that space, a lot of, quote and unquote, shenanigans, right? So many reforms, okay, have taken place. But what do they mean? End of 2025. That's my next slide. Where did this economy close? I was a guest of CNBC towards end of November last year, and I made a statement that they took as a very important one. I said, the Nigerian economy as of November 2025 was in a better place than where it was a year before then. That was the way I put it to CNBC. But now, the year closed 31st of December 2025. GDP growing. Reality of the Nigerian economy is that the GDP has been growing steadily. But the challenge had always been that growing how? Is it growing and creating jobs or growing and creating dollar millionaires? There was actually an article on that in January 2014 that branded Nigeria along with 3 other countries. And they were given an acronym with their first names. MINT. M for Mexico, I for Indonesia, N for Nigeria, T for Turkey. Now those 4 countries, as of January 2014, we are minting dollar millionaires rather than creating jobs. So we took that as a line to challenge here in Nigeria. How do we recalibrate our economy so that instead of creating dollar millionaires, it starts creating jobs? So the issue then is, how can this economy create jobs? So whatever we do, therefore, in terms of reforms, must connect with how to restructure the economy in a way that it is growing. Yes, no doubt, we are not talking any longer about growth rate, this population growth rate. That flipped about 2021. Since 2021 up until date, the economy has been growing faster than the growth rate of our population. So that is no longer an issue. So the issue is growing and creating jobs. End of the year, exchange value of the currency, a major issue. I recall November 2002, that was some 24 years ago. I was a guest speaker at the Central Bank's Annual Monetary Policy Conference. And the CBN asked me to interrogate a paper. Give us an advice. What should Central Bank focus on in terms of monetary policy? Should we take on inflation, exchange rate, or interest rate? We call them the 3 macroeconomic prices. And I said, if you look at the Nigerian economy and the way the regular Nigerian, that's an economic agent, behaves, the one particular price that he or she is sensitive to is the exchange value of the currency. And so that, for me, was a pointer as to where central banks should focus on. If you can get stable exchange value of the currency, a lot of things can also be dealt with and brought in line. Now, when you look at where we ended 2025, official rate 1435.76 to $1. Parallel market, we call it roadside rate. If you like, call it curb rate. That's the language we used in my days at the World Bank. 1496. The difference between them, very important. We call it premium. That premium, IMF gives you a benchmark. That premium should not be greater than 5%. Once it's above 5%, it becomes an incentive for round tripping, which means everyone will make every effort possible to access official dollar for the official window and go offload at the alternative segment. They make a lot of money. But now take more naira made, return to the official window, buy even more dollars, and go offload again. So it becomes what you call round tripping. Now, what that also means is a window we need to watch on an ongoing basis. If you check the difference between them at the close of the year, it was 3.78%, and that premium was within 5% bound for most of 2025. So signaling stability. In fact, the Naira began the stability story in November 2024. So by the close of 2025, the Naira had been stable for roughly a year. All right. But not only that, at the official window, it appreciated. At the parallel market, it appreciated. Then monetary policy rate, we raised that in fighting inflation. Although some of us will also say that that instrument is not sufficient to fight inflation in Nigeria, because when we researched that, we found that from independent, that's 1960 till date, looking at the data, the effect of interest rate movements on inflation was just 37%, which meant that tool in the hand of central bank can only impact inflation in Nigeria to the extent of 37%. The rest of inflation is explained elsewhere. And of course, likely for us, it is food inflation, which of course took a new turn from 2017. We pointed it out to the government of the day at the time that if we did not address the issue of terrorists that are making farmers to run away from their farms, Nigeria was not too distant from food inflation, and that it became a reality. So in which case, what are the issues in there? In order to deal with food inflation, number one is you do mostly rain-fed farming. So you need therefore to move into irrigation, do year-round farming. There's also, what we call post-harvest losses, estimated between 50 and 60%. How do we address that? It means we must do something about storage. We must do something about processing. We must do something about logistics. So then we said, okay, beyond that, what else? It means that we must also ensure that agri turns into business, which means people invest in it, not because, like me, I have a vegetable, garden in my backyard. So I'm a casual farmer. So I eat my own vegetable. That, of course, began during COVID in 2021. So I've been eating my vegetables since 2021. We don't buy from the market any longer. But if you talk about agriculture, people need to go into that as business. So how do we then create such environment? And of course, I know fully well, our president here has also played a very important role in that instance. MPR was raised up to 27.5%. CBN argued fight inflation. So, okay, fine. But there are two ways to interpret the MPR, that's the policy rate. It makes the cost of borrowing high for businesses on the one hand, because we call it a signal rate, which means the central bank is signaling to the banks where it wants them to place interest rates. All right. So if it goes up, it is to make credit more expensive, because we want to discourage people from borrowing from the banks. If CBN takes it down, it means make credit affordable so that people can borrow more, companies can borrow more and grow their businesses. Now, in this instance, that is only the borrowing side to it. The other side is investment. Now, with MPR at that high level, Naira assets, as we call them, that is financial instruments denominated in Naira, also commanded very high returns. So that became attractive for investors within and outside Nigeria. So a lot of investment flowed into Naira assets. If they came from outside, that meant they would come as foreign currencies. And that, of course, featured in capital importation and also, of course, in our FX reserves. That's a component of that, which also came with very interesting developments. FX reserve, by the way, the figure you see there is a 30-day moving average, which central bank adopted in November 2011. Because at that time, things were going the other way. External reserves were going down at that time. So when the Sanusi-led CBN adopted that, the idea was to hide the actual that was lower than that average, because higher figures historically will make that average higher as well. So I challenged it at the time. But of course, they said, look, that's the way we want to go. Now it is working the other way around. But the actual is actually greater than the average you see on the screen. We closed at average of $45.5 billion US, but the actual at that time was almost $47 billion. Okay? Now, we now interpret that. How can this also give you some measure of confidence in terms of forming an opinion where Naira will go? Somebody asked me last week, do you see the CBN devaluing the Naira this year? I said, no, there's nothing that points towards that. Because not only is that premium I mentioned earlier on within 5%, only in January it went a little above it, then returned to below 5%. I'll show you the figure just now. And then, secondly, if you look at the external reserve, there are two portions to it. There's the block portion, there's the liquid portion. Then we go to your trade data. What is Nigeria's import bill per month? So we take that import bill per month and use it to divide the liquid portion of external reserves. So we come up with how many months of cover, which means if Nigeria does not export anything to any other country around the world, how many months can what we have in the pocket pay for our import bills? And of course, end of the year 2025, it was 13.03 months. Recommendation by IMF, you need minimum of 3 months unimpaired external reserves to maintain stable exchange value of your currency. Of course, stock market, we don't need to begin to talk about that. And I put it this way. If you are an investor in Nigeria and your portfolio mimics the stock market, then you should have returned a return of 51.19% in 2025. So in which case, that becomes a benchmark. So you take the growth rate of the economy, you take performance of the stock market, and of course, look at your own sector, the CAGR within Nigeria and globally in terms of forming your, defining your goal for this year. Now, ladies and gentlemen, what has happened since the beginning of 2026 up until yesterday? That's why I always sent this to Mr. Drayo very early this morning, because I tried the data on a daily basis. So where was this economy yesterday evening? That's the next slide. Now, exchange rate, Naira has appreciated further. From beginning of this year till yesterday, the Naira had appreciated by 6.53%, which is already better than the whole of 2025. Okay? Premium is within 5%, 3.87. But the parallel market also, it has appreciated by 6.43%, which means it's not just one segment, both segments. Naira is gaining value there. Of course, inflation rate ticked down a little from 15.15 to 15.1 for January this year. How about external reserves? It has expanded further at $47.81 billion. That is 30-day moving average. But months cover, 13.56, the liquid portion of it. Again, take a look at the stock market. So far this year, return as of yesterday was 22.27%. There's no market in the world that can match that. That's year-to-date return in just 1.5 months. I don't think I've seen any market that will return that within 1.5 months of the beginning of a year. 22.27 as of yesterday. So now, what it speaks to is that you're operating in an environment that has a lot of opportunities. Let's now go into, I will skip the next few slides because what I developed them for is to have charts that show the trend. And it's important for you as business leaders. Business leaders, you don't make business decisions on what data is saying as at today. Rather, you take a look at trends. And then from the trends, you can form an opinion and then make your judgment. So let's go to, I will also skip the section on federal government budget for this year. And of course, I put a summary there for those who have not had time to look at that. So I put a summary of that. But let me now go to what I believe is the section that is important to us, the outlook. Welcome, Honorable Commissioner. Good to have you here. I'm sure the normal protocols will happen at the appropriate time. Just to acknowledge that you are here. Thank you very much. Now, what are the outlook drivers? Why is it that investors around the world are looking at Nigeria and many of them taking positions in Nigeria? In the last 1.5 months, I've had the opportunity to address about 4 or 5 chambers of commerce. And of course, dealing with investors from different geographies around the world who are now putting their foot on the ground, not just talking about we have planned to invest in Nigeria, but bringing foot on the ground. So now, why is this so? Yes, the market. When we talk about Nigeria being a market, people often say, well, there is poverty. But I also have data to prove that the argument about poverty is not totally correct. In fact, the latest paper I wrote on that, which is part of a book published a few months ago, is to make the point that when we talk about poverty in Nigeria, we do a miscalculation of poverty. And I'll give a very simple indication of that. When you measure someone's position on the poverty scale, I'll say it is based on what he or she earns. I say in the African context, that is 40. Because in Africa, we don't live based on what we earn. We live as a community where we help each other. It is a common practice in Africa that if I have a need, I can talk to my brother. Oh, can you please assist me with 20,000 there? I'll give it back to you later in the day. I say, I assist you with 20,000, you bring it back. I will forget about it. In which case, instead of earning that 20,000 that I spent, I totally received it as a gift. I didn't beg for it as a gift. That's the normal pattern. So in which case, if you want to get a proper view of poverty in Africa, you should look more at what people spend, not what they earn. But that's just by the way. So but the population is large. We are number 6 in the world. But there are peculiarities I want to point attention to. And that will come back to you as a business leader. Now, the Nigerian population is young, 18.1 years median age. But not only that, it is tech savvy. The youth are tech savvy. Interestingly, adults in Nigeria now are also tech savvy, for your information. Okay? And 2 things I will say there. When you talk about netizens, that is citizens with access to the internet, all right? Nigeria ranked number 11. Some people recently said we're actually now number 7. I'm still looking for the data to validate that. So, but I will still say we are ranked number 11, all right, in terms of netizens, people with access to the internet. But then when you look at people like us, adults, that access internet, 84% of us do that with our devices. And that, of course, means 84% of Nigerian adults actually also access internet, but they do that with their device. What does that mean for your business? And I make it very simple. Now, your organization must have an agile footprint on the digital space. Because when the name of your company is mentioned, the first place people go to is the internet. They type the name on the search engine. Whatever comes up is the first thing they see and read about you. So the question now is, that information on your organization's website, is it current? Is that what you want people to know about you? Is that what will attract traffic to you? So I will leave the rest of that page and go to the closing part. Now, every entity doing outlook on Nigeria for 2026 is very positive, and some of them are quite aggressive. For our company, we expect that the economy will grow this year at 4.51%. Of course, Central Bank is very close to that. Central Bank says 4.49. All right? Of course, World Bank, IMF, 4.4. Initially, close to 2025, they said 3.7. But January this year, they raised up their outlook for Nigeria, 4.4%, each of them. Then NASG came with 5.5%. But the thing really is this. Everyone doing outlook on Nigeria for 2026 sees an economy that will grow stronger and faster than 2025. So the question for you is this. What are you also planning for your organization? If everyone looking at the economy says it's going to grow faster, it's going to grow stronger. So what are you doing? And that is where I'm going to wrap up shortly. Now, looking at construction and real estate, very interesting. I need to point this out also. Now, for real estate, for the first time in 2025, that sector was realistically positioned as a major contributor to GDP in Nigeria. So it was moved up from around 4% contribution to about 13.4% contribution to the GDP of Nigeria for the first 3 quarters of 2025. So you see it, there's a chart I also put there. You will see it there. Okay? It shows clearly that your sector is actually an important component of this economy. But not only that, construction, of course, is within the same band, 3 to 4%, 4.7%, down to 3.4, 3.7. But when you combine both, as we have here for this committee, it speaks here. And this is the difference in 2026 compared to the previous ones. Pre-election years and previous ones, calculation by the political gladiators is always how we are going to do some manipulation here and there. But as of today, the Nigerian electorate is very aware. And so they are conscious of the fact that if we are going to get you to vote for us, we must do projects you can relate with. So there will be a lot of funds committed to projects this year. So that's a lot of opportunity for construction. Look into that as well. Of course, issues in there, inflation rates is coming down gradually. In our company, we project that end of the year, inflation will go to very high single digit, 9.84%. CBN looks at 12%. A few others look at 11, some 13. But that is the projection for inflation this year. So let me wrap up this way. I put some things there in terms of where opportunities are. But my closing is this. If every notable entity has done outlook on Nigerian economy that is very, very positive, what then should your organization do? And I always say this to people when I do an outlook, and it comes from this perspective. In the old days, we call it old school, understanding of consultants like me. Say, consultant will come to you, borrow your wristwatch to tell you what the time is. That means zero value added. You are paying him for nothing. But say, nowadays, a consultant will come to you, even if he borrows your wristwatch to tell you time, he will also add to it, what should you be doing at this time of the day? It is 11:02. What should you be doing? That's what I will tell you. So what I will close with is tell you what you should be doing in an environment like this that we have described. Number one, your organization needs to relentlessly transform digitally. And as you are doing that, also build cyber resilience. Very important. Secondly, this is the season and the period of AI. You need to there are 12 AI tools that companies use all around the world. If you go look at that, there are 12 AI tools that companies use around the world. And this is the way it works. AI won't take people's jobs, but AI will take the jobs of people who refuse to learn how to use the tools. We now bring it to companies and organizations. Organizations that will be effective in competing will be those who adopt, who embed, and then sustain AI tools, including agentic AI. I think the latest development is a social media for AI tools. I think they call it Mootlock. What that does is you see, AI tools, robots talking to each other. For the first time they attempted that, two of them started talking to each other, and the people minding them didn't understand what they were saying. They shut them down. But now, in the last 3 weeks or so, there's now a social media platform for AI tools where they now communicate with each other, but they are now closely monitored by human beings. The idea is we don't want them to plan to start killing human beings because they are talking to each other. We don't know what the language they are speaking to each other. We now map the language and track them. So but what this means for you anyway is that your company also should look at AI tools relevant to your business, adopt them, embed them, and of course, sustain their usage. Then explore and deepen strategic partnerships. There's no better illustration than this forum, where the Construction and Real Estate Committee of Nbcc is partnering with FIAPSI, and of course, sponsorship from diverse members. Then continually interrogate membership economy. Membership economy means the stakeholders of your entity. Why should they continue relating with you? Why should shareholders still leave their money in your hands? Why should directors still remain on your board? Directors do resign at times. I do resign from boards. When I feel not comfortable with how that company is performing, I resign. I get out of the place. Okay? So why do I want to remain on your board if I'm a director of your company? I'm an employee. Why should I remain an employee? Should I want to work for your company until I retire? Or I want to just bail out of the ship at the simplest, opportunity. The final one, track regulations and also relentlessly comply. And in the lighter mode, final. Everything is going to be fine in the end. Full stop. If it is not fine, then it is not the end. Thank you so very much, ladies and gentlemen.
Please make that round of applause a little bit louder. That was a fantastic outlook presentation. So in the course of the day, the panel and the panelists will be unpacking some of the precepts that have been discussed this morning. But while the presentation was ongoing, we had the pleasure of having in our midst the Honorable Commissioner for Housing in Lagos State, Honorable Moruf Akinderu-Fatai. A round of applause for him, please. Very shortly, we'll be hearing from him. But before then, we would like to share some messages from some of our esteemed sponsors. So at this time, we'll just take a very short presentation from Eco Development Company, and they will also come to give a 1-minute explanation of what they do. So, media, if you can just show us that presentation. Thank you.
Discover a place you can proudly call home. A luxurious space worthy of being a life witness. Shared with a community that strives for the same values and refined lifestyle you praise and choose. Discover Azuri, the tallest residential tower in West Africa. At Azuri, you can create your most precious memories in a smart home, equipped with state-of-the-art connectivity, 24 hours electricity, swimming pools, gymnasiums, restaurants. Mark every milestone and happy occasion sumptuously with options of luxury 6-bed, 4-bed, and 3-bed. Discover a place you can proudly call home. A luxurious space worthy of being a life witness. Shared with a community that strives for the same values and refined lifestyle you praise and choose. Discover Azuri, the tallest residential tower in West Africa. At Azuri, you can create your most precious memories in a smart home equipped with state-of-the-art connectivity, 24 hours electricity, swimming pools, gymnasiums, restaurants. Mark every milestone and happy occasion sumptuously with options of luxury 6-bed, 4-bed, and 3-bed apartments. Be part of the elitist circle that will make Azuri their home. Don't just live. Celebrate every day by living above. Azuri. Live above.
To just give us a 1-minute presentation on their product. Thank you.
Thank you very much. Good morning, everybody. All protocols observed. My name is Adedapo Macaulay. I head business development at Eco Development Company, FZE. We are the builders of Azuri Towers, the #1 address in West Africa. Today, as I speak to you, our curated community sits on 27,000 square meters of land, priority land in the Marina district of Ikua Atlantic. The main reason why we're here today is to invite you to come see what we have built. Already, we have 3 towers standing, 1 commercial tower and 2 residential towers. Azuri 1, which is the crown jewel, we only have 1 apartment left out of 47. Each apartment costs $2.5 million. In Azuri 2, we have 93 apartments, 3 bedrooms and 4 bedrooms, $1 million and $1.2 million, respectively. The reason why I'm calling those figures is because our last speaker said something about Nigeria making millionaires from 2014. So that is a testament. And more importantly, most of our buyers are Nigerians. However, we're still trying to get some of the people in diaspora to come in and take up some of those apartments. So we invite you to come see what we've built in Ikua Atlantic. And I promise you, it's a better way to live. I'm pretty sure it'll inspire you. And more importantly, when we talk about adding value in the construction industry, I want to believe that we are part of those who have made that happen. Because within the last 4 years, in terms of sales, we have made over $300 million. And I'm pretty sure that those taxes for that goes to the federal government and also helps with a lot of other things. But thank you very much for your time. Again, come see what we've built in Azuri Towers.
A round of applause for a co-development company. All right, so we'll just move quickly along. It's my pleasure to welcome Honorable Maruf Akinderu-Fatai. I'll just do a short citation. He has a very long citation here because of his experience. But it suffices to say that he plays a pivotal role in shaping housing policy and the delivery of one of Africa's fastest growing urban economies. And under his leadership, Lagos State continues to advance initiatives to expand access to affordable housing, strengthen regulatory oversight, and foster sustainable urban development. Ladies and gentlemen, I present to you Honorable Maruf Akinderu-Fatai. Round of applause.
Okay. Good afternoon, everyone. I want to apologize for coming in late. And this is an occasion that I have marked as very important. Unfortunately for me, last night, we're moving gradually to when people are talking about election February 20, who will have done all the needful before then. So I got a call, and that meeting took me up to 2 o'clock in the morning. So I'm so sorry that I'm here late, but I'm very happy to be here. The President and Chairman of Nigerian-British Council, Prince Abimbola Olashore. The Deputy President, Nigeria-British Council, Mr. Akin Oshuntoki. Council members, World President, International Real Estate Federation, FIAPSI, Mr. Antonio Capagnoli. President, FIAPSI Nigeria, Mr. Akin Okpatola, distinguished guests, gentlemen of the press, ladies and gentlemen. Good morning, good afternoon. I'm deeply honored to address this distinguished audience at the Nbcc Construction and Real Estate Outlook 2026. For nearly 5 decades, the Nigeria-British Chamber of Commerce has played a defining role in shaping Nigeria's economic discourse and serving as a bridge between public policy and private enterprise, and between Nigerian opportunity and British capital, expertise, and institutional depth. The credibility of this platform lies not merely in its longevity, but in its consistency in convening serious, solution-oriented conversation at critical moments in our national journey. Today's theme, navigating reforms, driving resilience, is particularly apt. It reflects both the urgency of the moment and the responsibility before us. Across the globe, construction and real estate sectors are being reshaped by physical reforms, insurance restructuring, climate imperatives, financial tightening, and involving investors' expectations. Nigeria is not exempt from these forces. What would distinguish us, however, is how deliberately and intelligently we respond. Construction and real estate are not peripheral sectors. They are structural pillar of economic development. They support industrial activity, absorb labor at scale, stimulate domestic supply chain, deepening capital markets, and provide the physical foundation for productivity, commerce, and human dignity. Shelter, after all, is not merely an asset class, it is a social good. The health of this sector, therefore, has direct implications for economic stability, social inclusion, and long-term national competitiveness. As of January 1st, 2026, when the new tax reforms have taken effect, the construction and real estate sector finds itself at a definite inflection point. These reforms are designed to strengthen fiscal sustainability, improve compliance, enhance risk management, and align Nigerian regulatory environment with global best practices. These objectives are legitimate and necessary. However, the success of reforms is not measured by legislation alone, but by how reforms influence investment behavior, project viability, housing delivery, and sector confidence. At the core of the tax reform is an attempt to improve efficiency, broaden the tax base, and reduce administrative fragmentation. For the construction and real estate sector, taxation intersects with virtually every stage of the value chain: land acquisition, development approvals, construction inputs, corporate income, value-added tax, capital gains, property transactions, and estate management. The challenge, therefore, is not the existence of taxation, but the clarity, predictability, and coordination of tax obligations across institutions and tiers of government. Construction is inherently long-term and capital-intensive. Projects often span several years from conception to completion. As such, investors price risk based on certainty. Where tax rules are ambiguous, inconsistent, or subject to misinterpretation, project costs rise, financing becomes cautious, and capital seeks safer jurisdictions. On the other side, where tax policy is transparent, stable, and efficiently administered, it becomes a catalyst for growth rather than a constraint. The same logic applies to insurance. Insurance is fundamental to risk allocation in construction and real estate. It protects assets, safeguards investors, reassures lenders, and enhances project bankability. However, when insurance requirements are misaligned with market realities, whether through excessive premium, limited product suitability, or weak underwriting capacity, they can unconsciously slow development rather than support it. It is important to acknowledge that reform will not be cost neutral in the short term. Yet, it is equally important to recognize that reforms also present opportunity. A clearer tax environment improves transparency and reduces informal practices. Stronger insurance regulation enhances confidence and attracts institutional capital. When properly aligned, this reform can strengthen governance, deepen investment, and reposition the sector for long-term resilience. Navigating this reform landscape requires a deliberate shift in approach. The era of passive compliance is over. Developers, investors, and operators must adopt proactive adaptation strategies. This includes strengthening internal tax planning capacity, engaging early with regulators, and relying on professional advisory services to structure projects efficiently within the law. It also requires viewing insurance not merely as a statutory obligation, but as a strategic risk management tool that enhances resilience, project capital, and support financing. Technology will also play a decisive role in this transition. Digital project monitoring, transparent cost management system, modern construction planning tools, and data-driven decision-making enables firms to respond more effectively to regulatory change while maintaining efficiency and quality. These tools are no longer optional enhancements. They are fast becoming baseline expectation in competitive real estate markets. Ladies and gentlemen, resilience is now the defining currency of the construction and real estate sector. Resilience in financing models that can withstand interest rate and currency fluctuations. Resilience in design standards that respond to climate realities such as flooding, heat stress, energy efficiency, and environmental sustainability. Resilience in institutions that provide policy continuity, regulatory clarity, and credible oversight. From the Lagos State government perspective, resilience has been intentionally embedded into governance and planning. Under the leadership of Governor Babajide Olushola Sanwo-Olu, housing and construction are positioned as strategic economic enablers within the Teams Plus agenda, particularly under making Lagos a 21st century economy and the no one left behind philosophy. This approach recognizes that economic growth must be inclusive and that housing delivery must balance affordability, quality, and sustainability. This is further reinforced by the Lagos State Development Plan, LSDP 2052, which provides long-term policy continuity across administrations. For investors, local and international, this continuity is critical. Capital does not fear reform. It fears unpredictability. Long-term plans anchored in data, institutional strength, and stakeholder engagement provide the confidence required for sustained investment. As we navigate through these reforms, it is important to note there is no reform agenda that can succeed without shared responsibility. Government must provide policy coherence, regulatory clarity, and efficient implementation reforms. And reforms must be growth enabling, not growth inhibiting, but must be continuously reviewed to address unintended consequences. Private sector leaders must adapt business model, invest in compliance, embrace innovation, and pursue efficiency rather than transferring all additional costs to end users. Real estate professionals, architects, engineers, planners, surveyors, builders must uphold standards, ethics, and continuous professional development, ensuring that safety, quality, and sustainability are never compromised. Investors and financiers, including international partners, must deepen long-term engagement, support innovative financing structures, and align capital with sustainable development objectives rather than short-term gains. Also, financial experts and policymakers must sustain open dialogue, monitor reform outcomes, and adjust frameworks based on evidence, data, and market feedback. Ladies and gentlemen, Nigeria stands at a defining moment. The reforms before us are significant, but so too is the opportunity they present. With this clarity, collaboration, and confidence, the construction and real estate sector can emerge stronger, more resilient, and more transparent, and more attractive to long-term investment. Lagos State stand ready to continue to provide leadership through policy stability, institutional strengthening, and meaningful partnership. We value the enduring relationship between Nigeria and the United Kingdom, and we look forward to deepening collaboration as we collectively shape the future of our built environment. Reform is inevitable. Resilience is intentional. Future will belong to those who align the two wisely. Thank you, and God bless you.
We can make that round of applause louder. That was a very powerful keynote address. And something is clear. I've heard it several times today, which is that even though we are going through reforms, the opportunities are enormous. So I want us to key into that. So very quickly, we're going to be moving on to one of the key aspects of this outlook, which is the panel section. But before we do that, we'd just like to take another brief presentation from one of our sponsors. So if we can have the video from Knight Frank come up, then we'll go to the panel section. So if you can play that for us, media. Round of applause for Knight Frank. Knight Frank has been a steady partner to Nbcc. So we appreciate them for their sponsorship, along with Eco Development Company and the other sponsors who will be calling up later in the day. So to herald this section of the day, we thought we'd do something slightly different this time around. We would like to have a presentation from one of the people who will be on the panel. He is a subject matter expert in the area of tax, and we thought that tax, is a very important aspect of this discussion. And there's been a lot of questions around how does this tax reform impact real estate? I've not had a very convincing answer to that question. A lot of people believe it's advantageous. Some people believe it's detrimental. So why don't we hear from the experts? So before we bring on board the full panel, I would like to invite Mr. Kenneth Erukume, who is the partner tax and reporting and strategy at PwC. So a round of applause to welcome Mr. Kenneth.
Thank you very much. Good morning, everybody. I'll stand on existing protocols. And I think Mr. Odunayo has rightly highlighted what is, a big conversation in Nigeria today, which is the tax reforms. And from where I'm sitting as a tax consultant, I think a lot of people don't understand it. And therefore, it's only normal that you're scared of what you really don't understand. But a lot of misconceptions are out there, and my job here within the next few minutes is to just try to tell you what remains the same, right? From what it was in 2025, what has changed, and then just highlight why people are worried. Okay? I don't know if my slides are there, but if it's not there, I'll tell you the first thing is that withholding tax on leases has not changed. And on social media, there was a very interesting one where somebody had put up something and said their landlord had charged them withholding tax, right? Withholding tax is not an addition on a rental invoice. It's actually a deduction from that invoice. And it has been there forever. The only difference is that if it is a residential property, the individual there is not a business, so does not deduct withholding tax. So the landlord shouldn't have charged withholding tax or envisaged withholding tax in that sort of transaction. If it is a corporate that's the tenant in that accommodation, then that corporate tenant is supposed to deduct withholding tax. But withholding tax is not the final income tax. When the company prepares its tax return, saying this is my income, these are my expenses, the net, then applies the tax rate, whatever is left, they charge the, whatever is that amount of tax, the withholding tax is knocked off against it. So it is wrong, technically, for a landlord to add on withholding tax to an invoice, right? And that has not changed from before, still the same with now. If you're a landlord, as an individual or a corporate, rental income is taxable. So that has not changed before. It's the same position now. What you will discover when you look at the profile of different state tax authorities, a lot of their income, their IGR, comes from pay as you earn, right? But pay as you earn is the tax you collect from employees. Now, what government is asking is, where is the income tax on rental income? Because these employees have to stay somewhere. So if 80%, 90% of your tax is coming from employment income, then there's an expectation that maybe another 20% should come from at least rental income, because the employees live in a building. Okay. So historically, there might have been under declaration of rental income. So government is now interested. But the law hasn't changed. Rental income for an individual is taxable. And for a company, it's taxable. Individuals, PIT, companies, CIT. If you take a loan to get property that you reside in, the interest on that mortgage is tax deductible. It's tax deductible before, it's tax deductible now. Real estate investment companies, the rental income or dividend income, a real estate investment company. When I say real estate investment company, it's not a company you've just set up to do real estate. I'm talking about the one regulated by SEC. The rental income and the dividend income they get is completely tax exempt. So it's actually an interesting vehicle to put real estate, portfolio and, one that you issue to the public, because it's going to be taxed only on distribution to the unit holders. And that has always been there, and it's still the same position now. Stamp duties has always applied on rental of property, assignment of property, mortgages. VAT exemption on interest on land and buildings. It has always been the case. I think since maybe like 4 years ago, where the law, one of the finance acts clarified that an interest in land and building is not subjected to VAT. So if you sell property, there's no VAT. If you rent out property, there is also no VAT. And then when you dispose of property, there has always been tax on disposal, whether it is capital in nature or revenue in nature. If it's capital in nature, then it's subjected to capital gains tax. The only difference now is that the rate has changed from 10% to 30% if it's a company, and the progressive tax rate up to 25% if it's an individual. So what has changed? I think the first thing is that the stamp duties has reduced significantly. Before, the stamp duties on rental was 6%. Now the rates are 0.78% or 3%. And the government has kicked in an exemption as well. So if the rental value is less than 10 million naira, then it's a complete exemption from stamp duties. So that's the first thing. The other thing that has changed is that small companies are now exempt as well. And small companies before used to be 25 million. the turnover used to be 25 million. Now it is 100 million. So if the income within that company is less than 100 million, then that company is completely tax exempt. One of the questions I usually have many times when I talk about this is, if my revenue is 1 billion, shouldn't I set up 10 companies so that each of them will earn 100 million and get exemption? But my job is not to advise you on that. It's just something that exists. Of course, the tax authorities will look at it and check whether you're manipulating the system. Sale of residential building is tax exempt. So it is a one-time offer from government. So if you reside in a building and then you sell it, then it's completely tax exempt, whatever profit you make, and up to 1 acre of land attached to that property. So effectively, it's quite generous actually. Effectively, you could have a tranche of land, right, that you have always wanted to dispose. You can just go and build one room apartment and stay there, for a bit, and then you sell it off. Okay. So that exists. For construction, the scope of input VAT has been expanded. So if you're into construction of property, then you could only claim your input VAT on goods that you buy to construct and, for whoever is the developer. Now, the scope of that input VAT claim has been extended to even overheads and fixed assets. So, this is one of the biggest risks from government in terms of revenue. Why? Because the original plan was to actually increase the VAT rate, but also broaden the scope of people to claim input VAT. But it was pushed back from the Governors Forum, so they maintained the rate at 7.5. But the scope of claiming input VAT has been extended. So just to give you an idea, for a company like PwC, the VAT on all our costs will now no longer be a cost because it will be recoverable when we are invoicing our customers. So effectively, if all our costs were subjected to VAT, our costs will reduce by 7.5% from January 2026. There's no more pioneer status on commercial property. There's a limitation of the tax incentives. So if you're into construction of tertiary or specialist hospitals and you invest at least 5 billion, government will give you 5% cash back as a tax credit. So if you do a 5 billion to develop a specialist hospital, government will give you 250 million cash back. Of course, they wouldn't give you the cash. You can knock it off against any tax that that you're required to pay. So those are the major changes. So you would realize that the tax reforms from a real estate perspective seems to be very attractive and palatable. There's one I didn't mention. So just for completeness, an individual who pays rent for their personal accommodation are allowed to reduce their taxable income by the lower of 500,000 or 20% of the annual rent they pay. Now, what is the government trying to do with this? The employee or the individual or whoever has to give the tax authority certain information about their landlord. So once they give the information about their landlord, government will give them 500,000 naira deduction, so that all of us who have property in Lagos State will now be drawn into the tax net. I think in closing, why are people anxious or why are people worried? The strategy of government is actually to use big data for tax assessment. So One of the things that they're doing, for example, is that banks and other financial institutions, including stockbrokers, insurance companies, are now required to file returns with the Nigeria Revenue Service of every transaction of 50 million and above in a month for individuals and 250 million naira and above for corporates. That information will be submitted with the Nigeria Revenue Service, with the information saying Kenneth Erikume, by the grace of God, 1.5 billion naira from selling a property in Ikoyi. So they would have all that information, right? So that's one. The other thing is that there's something called e-invoicing and fiscalization. So the expectation is that, and they've started with companies that their annual turnover is 5 billion and above. So what they've effectively said is that you must connect with a systems integrator and an access point provider, that every invoice you issue has to be reported to the government's portal. When this is in full production, because they will go below the 5 billion, every economic transaction in Nigeria would be recorded in the tax authority's portal. They're also working on something called Unified Tax Identification. So you can go on the JRB's website and put your details in there to give you your tax ID. Every individual in Nigeria would have one biometric unified tax ID. So before, you could have Kenneth Erikume, one tax ID, Erikume Kenneth, another tax ID. Now it's just going to be one consistent. So if you pop up and say, well, I'm taxable in Osun State, I'm not taxable in Ogun State, and so on, the tax authorities can easily verify, because they would have the technology to talk to themselves. And that's the big worry, because all these conversations around, do I need to put description on my bank transactions and say what it means? Would the government debit my account directly? Those things are really coming out from, I would say, the fact that people don't really understand it. If you were compliant like me before, you would have no challenges. But if you're not compliant, then you would be worried. I think overall, and the speaker did a fantastic job around the macros. One of the things he touched on, but I would like to emphasize, is that the government, is borrowing significantly, right? And the only way to actually patch that up is not to go and borrow more, but actually to generate the revenue. So we actually have a collective, and it seems like I'm an advocate for this, but we all have a role within the industry to pay our fair share of taxes. So with that, we'll go into the panel session, I believe.
Another round of applause for Mr. Kenneth. I think he has done justice in simplifying what hitherto was a very complex concept, to a very simple complex. But we have the opportunity to still interrogate this further as we move into the panel section. And at this time, I would like to introduce our moderator for today. He's no stranger to practitioners in this industry. Is Mr. Dolapo Omidire. He's the founder and the CEO of Estate Intel. A round of applause as he comes along. He has many, many years of experience, and I'm sure he's going to do justice to the panel section. You're welcome.
Okay, good morning, everybody. I'm going to stand on existing protocol and invite Kenneth and Mr. Abiodun onto the stage. And I'll then take the time to invite or introduce the other panelists. Can I have a round of applause for Mr. Abiodun and Kenneth? So I'm going to introduce Mr. Gbenga Ishmael. He's a leading Nigerian real estate professional and the principal partner at Gbenga Ishmael and Partners, rather. A round of applause. It is a multidisciplinary real estate consulting providing valuation, advisory, brokerage, facility management, and development services. He is the immediate past chairman of the Lagos State branch of the Nigerian Institution of Estate Surveyors and Valuers, and an active participant in global real estate networks, including FIAPSI, one of our partners for this event, alongside other international bodies. Can we give him a round of applause, please? And then finally, I would like to introduce Mrs. Abimbola Onokomaya. She's an insurance professional whose career spans underwriting, claims administration, business development, and risk management. She became the pioneer managing director of Peak Trust Insurance Mortgage Brokers and has been there since 2003. Can we give her a wonderful round of applause? Can I get some help in taking this down? Okay. So thank you, everybody. I'm going to start with you, Kenneth. We got some very, very, very interesting statements, especially around that landlord and withholding tax matter. I'll go around and ask everybody about reforms and what we believe has been the most impactful reforms that we've seen, milestones over the past few years. But just picking off the presentation while it's still hot, I just wanted to address the deduction part on the landlord withholding tax. So where you have a landlord that has typically been, say, receiving 15 million naira for rent for his commercial property, for his space in the commercial property over the past decade, it's been increasing over the years. And now this is going into full force compliance. You now need to deduct a certain percentage. And the landlord pushes back and tells you, hey, you're telling me, the government is telling you you have to deduct X amount for my 15 million naira. I don't care. Pay me my 15 and go and you can keep the extra so that you can do the remittance. You're saying that that's not allowed. We're not supposed to be grossing up, but if they push back, is there really anything an occupier can realistically do?
Well, I mean, that practice already exists, by the way, where landlords insist that they must get their net proceeds. It means commercially, and landlords are allowed from a commercial perspective to factor in tax into your pricing. So my charge out rates as a consultant, has a buildup of costs in it, which includes taxes. But the thing that is not allowed, and the withholding tax regulations is actually very clear on that, commercially you cannot add on the withholding tax to the invoice. So I think that will be the first pushback, that legally, and you show them the withholding tax regulations, it's actually not allowed. I think you also need to clarify to the landlord, and I think this is a bit of education. The reason why they're saying we do not want to care about the withholding tax is because, they perhaps, and I'm not saying this happens all the time, maybe they are not declaring their income to the tax authorities. You need to tell them that this is a new dispensation, that sort of, for want of a milder word, evasion would no longer be able to fly. So they essentially have to understand that they have to declare their income, and this withholding tax you're deducting from them would be a credit. It's not lost. Because when they compute their final income tax liability, they can get a benefit from it. And why must you do that? If you're a company, it's important because the law also does not allow you to take a deduction for taxes that you add on to an invoice, except if it's statutorily allowed, like VAT, where you add on the VAT to the invoice, you can't claim it back, then you can deduct it. If you add on an income tax to an expense, like withholding tax, you add it on to the expense, the tax authorities will not allow you to get a deduction, right, of that expense in your tax return. So it's detrimental to you if you do not engage at that level. Structures to manage it. There's also the tax ombuds right now that you can call on and say, well, we have this dispute, and then they can come and have a conversation as an intermediary to reconcile the issue. Yeah.
Okay, thank you. Mr. Ishmael, can you tell us how some of your real estate clients are reacting to the recent reforms, especially in the taxes? So when we're talking about disposal of property assets, property valuation, what has been the response in the lead up to January 2026 when this was officially implemented, and how have things changed over the past 2 months?
Thank you. Thank you very much. I think, as I said, everybody has been panicking. And when they come around, I said, I don't even know why you're panicking. This reform is not reforming anything. For us in the real estate industry, it's business as usual. But what has changed simply is that we've been asked to now enforce. The withholding tax has always been there. It is not a charge on, it's a credit that goes on your income receipts from leases. What is of more concern is how capital gains is going to now be reported, how it is now dealt with. It has also always been there. So effectively, the confusion is simply people have not read what it needs to do. Even government has not been practical in trying to collect and enforce. And going back to the data, when you collect withholding tax from rental property, then you would then begin to know how many properties are actually being rented in the vicinity and the territory. So collection is the biggest problem. And I think that's what government's problem is. However, what Kenneth said, that the government needs to raise the revenue, so he agrees with tax reform. I don't agree with that. Government needs to create jobs. We don't need to increase taxes, but the 10% withholding tax is not a tax. It's just the income tax collected in a different way. It doesn't increase your tax in any form or manner. So I advise my clients anytime they come, don't panic. We'll report rightly. Just this rent, just know you are not, all the leases are net anyway. It just means that for tenants, your technical rent will go up because you now have to start paying that 10% on behalf of the landlord. That's what it is.
Okay, thank you. I mean, that's definitely useful. If I take it to you, Mr. Abiodun, can you tell us some of the advantages? Actually, well, Mr. Abiodun and Kenneth, both of you, can you tell us some of the advantages that the real estate professionals, construction professionals might not be taking full advantage of? So we've heard the misconceptions, what's right, or what's wrong, what's currently being done. What do we need to actively start taking advantage of from these recent reforms that we've seen?
Thank you so very much. Let me speak to that. And my perspective to it is, first and foremost, real estate professionals need to understand the issues. That means they need to go through the statutes and be up to date in terms of the specifications. That's number one. Now, having educated yourself, you then need now to educate your clients. That's also important. That has to change. In which case, you don't take things for granted any longer. And it also means that you become like an advocate. And that's why I come back to the comment you made. In the situation we are now today, the reality is that if we are all tax compliant, government gets more revenue and then they can do more. In fact, it's like the philosophical question. Which one comes first? The chicken or the egg? People often argue that why should I pay tax when I don't see what government is doing with my money? But the perspective of the tax authorities is that you pay first for a social compact. If you have not complied with the requirements, there is no moral ground to demand for the other side of that compact. And that is where my own perspective lies. So I would rather argue for compliance and then helping those who don't understand to understand it. And then we move forward. When we have gotten to that platform, we can now turn back and challenge the government as to what they are doing with our money. It's an issue actually in the concept and theory of taxpayer behavior. And there are 3 planks to that. It is not a platform for academics, so I won't go far into that. So let me stop here.
Thank you.
Okay. So 100% I agree. It's always the question, and I agree with both panels, because what is government here for? Government is here to ensure that the citizens' well-being is actually handled, and then there's order in a civilized society. So government has to create jobs, right? But in addition, government has to get money in order to create jobs. And that's the chicken and egg scenario. We've had historically been in a situation where we have had to provide our basic infrastructure around us, whether it is security, whether it is water, whether it is road infrastructure. Sometimes you do the drainage in front of your house. So we're now asking ourselves, do we really need government? And maybe that has now created the broken social contract where we then feel like, okay, we don't have to pay anything. But when you go to every country that has developed, right, tax is serious business. And you can check in the US, maybe one of the countries that we like to highlight, how many people go to jail for tax evasion. Celebrities go, criminals go. For example, Al Capone went, Lauryn Hill went, and Wesley Snipes went to jail. They spent time in jail. Because the idea is that if you're taking from all of us who are complying, you're benefiting from the infrastructure and you didn't drop a penny, then you've robbed all of us. So that's the concept. Now, even though we are now going into a place where we're saying, let us try to comply, what can we do to optimize? In taxation, there's evasion and avoidance. Avoidance is perfectly okay. In Europe, there's a question of morality of tax avoidance, but we're not even there from a Nigerian perspective. So what are those things that government has put in place that you can take advantage of? When I was talking about the disposal of residential accommodation up to 1 acre, that's a serious opportunity that, someone can take advantage of. Unfortunately, it's not available to corporates. It has to be individual. So when you're looking at that sort of property, you have to look at what vehicle do I use to hold it. So you have to put it under a personal vehicle. There's also this VAT recovery issue I mentioned as well. That, when I did the analysis for one of our businesses in PwC, my cost would reduce by up to 500 million, just because I can claim VAT on my laptops I'm buying, my overheads, and so on and so forth. So that is a serious advantage that people in construction can take advantage of. Unfortunately, people that sell property cannot take advantage of it because they are already VAT exempt. So if you're VAT exempt, you can't take the VAT on your cost. So that's an important one. Then the workers on the construction site, especially lower income, because anybody earning below 25 million, you would have seen it in the news. Some people were celebrating the my take-home pay has gone up. Some people were saying, my salary has gone down. So people that earn 25 million and below, their taxes have reduced. So that's an opportunity, especially for the lower income, the wage earners, the people on the construction site, that you can take advantage of.
Okay, that's useful. In terms of that, the second point on the construction cost, is that something that a tax consultant can support with, or how does one essentially get?
Thank you for giving me a cue to sell my market. Yeah. So you can do it yourself, actually. Okay. So there's basic information that we have put out there as a firm. But if you really need to get into the detail, then a consultant can actually help you. And I'm not just speaking about PwC. So PwC, any certified tax consultant out there can actually support and tell you, bring in your motor vehicles, bring in the VAT on your motor vehicles, the VAT on your electricity, the VAT on your laptops. All of those things are now recoverable. So before, when you pay those things, it's an absolute cost. Now it is no longer an absolute cost because you can recover them from government.
Okay, thank you very much. I want to come to Ms. Abimbola now and really start discussing some of the other sectors or the sides of reforms, specifically in insurance. I think the first question I just want to ask is, in terms of the new legislation we're getting, what are the reforms that you're excited about in the Nigerian insurance industry?
Okay, thank you very much. Good afternoon, everybody, and good afternoon, my panelists. I would say that I'm actually very excited about it because ordinarily, insurance is supposed to cater to everybody, like from the cradle to the grave. You don't have a situation where you have insurance as if it's not an obligation. It is an obligation under normal circumstances. But we would like to say that we recognize that the circumstances in Nigeria are not actually very normal. Okay? So this particular bill or law was passed just in August 2025 by our president, and we're very grateful. It's called the Nigerian Insurance Industry Reform Act 2025. And what excites us about it in the insurance industry and those people that are actually forward looking is that any form of capital project that you want to take, you can focus on your core competence and then just rely on insurance to bear the risk and just transfer the risk to the insurance companies. It's very, very versatile on risk management. Every single building that is higher than a bungalow should be insured. So what this does is that it ensures that insurance is no longer optional. It's actually compulsory now, but it would be better if people understood the reason for it being compulsory. So not so much because the insurance industry wants to extract, a pound of flesh, but it's just so that there would be some degree of competence in this risk management. You need to be able to insure, and it is very cheap, by the way. I mean, I would have wanted it to be more expensive, but it just happens to be very cheap. And so you're talking of the fire insurance, you're talking of the construction all risks insurance, you're talking of the banks actually now having to require and request for your insurance documentation before they give you loans. You're talking of a lot of human capital investment in the industry and making that human capital investment available cross-structurally to the construction all risks, to the real estate people. So it's very, very versatile, and it is something that is extremely welcome.
Thank you. I mean, the first question I was going to ask is, this is an additional cost to developers. But you've provided some guidance that is not that expensive. But I'm also curious to hear from you, Mr. Adedipe, in terms of what this means for the real estate sector as a whole, and if there are any learnings that we can take from implementation on the tax side and legal implementation on the insurance side. What can we learn from both sectors?
Well, yeah, thank you very much. Now, the way my mind processes this is that from the perspective of a real estate asset. And the question is, if I put this asset in place, what's the value on it? What are the risks involved? Let's even assume that, quote and unquote, it's under strike and that property is destroyed. So what next for the owner? So if it is properly insured, that means there will be a valid claim that can be made on it, and then a settlement, which is the purpose of insurance. That is to take away the worry about the risk, crystallizing. And there are so many different perspectives. Now, take it also from the construction risk as well. That's from the stage of development. In fact, through the entire space, and I give an illustration. There was this transaction is to build a dry port, in Nigeria here. We're looking at a value of about $110 million. Now, the funding was to come from US and UK, and then the fund itself was to be insured. And then insurance came from South Africa and Hong Kong. So projects in Nigeria, funding from UK and US, insurance from South Africa and Hong Kong. Now, that gives you an idea of the stakeholders involved in that process. Then the insurance itself took different aspects of the project, from construction now to the operation, and of course, the funding aspect. Not just funding now, the FX risk involved in that was also insured. So you can now see how, quote and unquote, ubiquitous insurance is in the entire value chain. So the idea then is that the more we understand the importance of insurance and then comply with what NIRA is, of course, the Nigerian Insurance Reforms Act of 2025. That's what it is. So when you understand that insurance is no longer, let me say, I would rather put it this way. Insurance is now mandatory. Let me put it that way. Which means by law, you can't claim you didn't know. And that means all real estate assets above a bungalow must be insured. So it also means that right from when you conceive the project, the cost of insurance becomes part of your project cost from the very beginning. And of course, it also means existing assets. That's another side we have not mentioned. Because we're talking about new assets being created, but existing assets too are subject to this particular law. But ultimately, what it does from the economic perspective is to deepen insurance and take us from less than 1% insurance penetration, which in fact is a poor area of performance for Nigeria when we compare with other countries. So it takes us beyond that. And then we also see a wider variety of insurance products coming out from these reforms in the insurance sector as well. So which then will mean I can take risk, transfer it to the managers, and face my core business. That, in fact, is the real game changer for the economy. And that's the growth implication of that particular reform.
Thank you. I mean, in terms of when we talk about this insurance and the penetration in Nigeria as a whole, I think based on what you're saying, we could say that we're not fully priced in terms of property prices. If a bunch of the construction, real estate people are not incorporating that, and now we're going to start seeing that incorporation, and the penetration should grow over the next few years, we can anticipate that pricing should also follow a similar trend, forgetting all other factors with just insurance alone. Is that a fair conclusion to make?
It will be so insignificant.
Okay, insignificant.
Yeah.
So let me support what our speaker has said in terms of the significance of the costing. The significance of the costing is so minute because insurance is actually deals with it's a law of large numbers. So by the time you aggregate the number of real estate companies in Nigeria, the number of construction companies in Nigeria, the number of human beings that live in houses. I'm not talking of if you're living under the Oshodi Bridge now. The long and short of it is that this is a huge number of people. And by the time you actually spread this along the whole value chain, you find out that the insurance cost is very minimal. The only thing that takes place is that by the time you find a catastrophe, like the one that happened where the whole building collapsing on the island, that is when you begin to understand that had you taken that very minimal amount and transferred it to the insurance company, then the whole value chain now benefits because the insurance companies will now turn around and pay for the reconstruction of that building because it was actually valued properly at the beginning. Now, the implementation of this is where there's a critical problem. And why do I say this? I beg to allow us in this audience to take responsibility. Now, when you have a building and you have maybe in, say, Lagos State, because that is where we're having this conversation. And then you have the foundation level, they come for inspection. They're supposed to sign off. You take it to lintel, they're supposed to sign off. You take it to decking, they're supposed to sign off. Now, if the engineers have an inclination not to sign off properly, I'm not saying anybody's corrupt, but it's just an inclination. Then you find a situation where the building can go up to 11 floors and then collapse. There is absolutely no reason for it. It's not necessary. Now, if it was in an earthquake-prone area, then you can say that maybe act of God or whatever, then you can say an act of God. But when it comes to something that can be practically even digitalized, you can actually digitalize it and ensure that every single construction, whether it is even a bridge or a house, this NERA thing is just bringing a sense of awareness to people and making them conscious of the fact that you can actually focus on your core competence and, get the insurance people to bear the risk. And in Nigeria, I dare say, my elder is here seated, Ashwaju Dr. Michael Olawaliko, and he can bear credence to it. The insurance industry, as we speak now, every single insurance company has to go through a magnifying glass of our regulator. And so, before they pass that test of being recognized as an insurance company or a reinsurance company, as the case may be, they've gone through a lot of scrutiny. And we have extremely deep pockets. We can underwrite business in dollars, in euro, in whatever. And even when you have multiplicity of assets in one city, like if you take example, let me say Alaro City, there's a multiplicity of assets in that place. You have the road construction, you have the borehole constructions, you have the ones that are 2-bedroom, ground plus 3 and all that. It's a multiplicity of construction taking place in that. And for the mere fact that they can all go on with their major core competence, just pass the risk to us. Very cheap, very accessible.
Can I just, follow on that and just ask, what other reforms would you be keen on seeing in the Nigerian insurance space that maybe are not already captured or might be beneficial for the industry as a whole?
Well, in terms of what are the other reforms, I would say that those reforms may not necessarily all be cast in concrete, but I want to say that there is supposed to be an overlap amongst industries. There shouldn't be something that is like, this is the construction industry, this is the real estate industry, and this is everything is supposed to be interrelated. There should be no fire engine, for example, without a fireman to activate the engine. Now, the fireman who is activating the engine is an employee of a particular government parastatal. The government parastatal themselves should be insured. Okay, the workers that are working there should have their maybe group personal accident insurance. The fire engine itself, because it is an asset and it is a huge asset anyway, should also have insurance. But when that fire engine goes to the site when they are called and there's a fire, where are your fire detectors within the buildings? Where is the hose place where you actually? So everything, it really runs from, like I said, the cradle to the grave. If you really can visualize it, you will find out that this thing, if it is hospitals, for example, are you going to insure the hospital without insuring the mortuary that is attached to the hospital? Something has got to give. So it has to be all encompassing. Are you going to insure the physical hospital building without insuring the nurses or the doctors? Are they going to not have professional indemnity insurance as a direct result of working in a hospital? So it is actually all encompassing. And I would advocate an interconnectivity that is documented and also digitalized. I'll say something, for example, when we're talking of real estate and construction. I'll say this. If you go, for example, to say Alausa, our secretariat now, in as much as you can say that I live at number 2 Okokomaiko Street, Ajangbadi, it should be mapped out. The whole of Ikoyi, the whole of Victoria Island, they should actually be mapped out. So by the time you now have your, do you call it this QR codes? That by the time you have your QR codes, either on the certificate that has been given to you by the insurance company, the whole street should be mapped out. And so digitalizing it is not a problem. Now, whether you can actually do that in Okokomaiko or Ajangbadi is a different ballgame. But I do know that you can do that in Lekki. Start from the places that are already existing and already fully constructed. And then you just take it down the line. And you'll find that it's a piece of cake.
Thank you so much. Mr. Didikwe, can you also, tell us what your views are on the insurance?
The only thing I will add to that is we have enough laws and codes to do most of the things that we require to get this economy to grow inclusively and sustainably. What matters more to me is execution. And that is about implementation. What we have done so far, if we implement them, we get a lot of value from the reforms, rather than talking at this point in time about gaps. Yeah, there are gaps. There's no particular issue you codify into law that won't come with gaps. Even the tax reforms we are talking about here, there are already some gaps here and there in discussing them variously. But let's start from implementation. And then as we implement, we see more gaps, we can address them as we go. If we implement what we have done so far, we get a lot of mileage.
Okay. In terms of implementation, we were in the second month into the year. How much longer do you think we have of the misconceptions of people not understanding so many questions? How much longer do you think till we can say that we've really this thing has taken on or has taken up with people?
Well, I would say we have time to wait for implementation. It's already on.
Mm-hmm.
Now, a month is already gone. Returns have been filed. For example, VAT returns are almost due. All right. So in which case, the implementation is already on, so to say. Now, for individuals, when it comes to, PIT, personal income tax, if you're in Lagos State, by the time you hit March 31st, that's the deadline for submission of your return. Thereafter, assessment will follow. Once you receive your assessment, payment commences. That's if you are not on payee. All right. So for me, implementation is already on. It's not a matter of deciding to be on the right side of the law. So, but for those who have been complying anyway, there's nothing to worry about. Those who have some things to worry about are those who have either done avoidance or evasion. Evasion is illegal. That is straight to the prison. Avoidance, you may say, is discretionary. But even at that, under the new law, avoidance can also lead you to prison. For example, every corporate here, under the new law, the NTA, as we call it, if you have a tax plan, it must be submitted upfront. Which means if your company develops a tax plan for this year 2026, you don't wait until you want to make your filing next year. That tax plan must be submitted this year, in fact, early this year. And it's with the Nigerian Revenue Service already. That requirement is there, the law. That was not there before. Anyway, so in my own days in banking, I left banking some 30 years ago. All right. Now, I used to handle tax planning for FCMB. It was part of my job then. Okay. But the law now says when you do a tax plan, it must be submitted, modified. So no, that's something you now bring later after submitting your returns. So all of these, liquidity things are in there. We need to get to know them and ensure we comply. But for those who have been complying, nothing to worry about. It's business as usual.
Okay.
Kenneth told us.
Bring the conversation back to real estate and construction now. I think I want to ask you, Mr. Ishmael, how are your clients, or what are your personal views on the key sectors that people should be focusing on in this environment of high reform? What are people paying attention to? Where are people investing? And what are you excited about?
Well, first, nobody wants to go to jail. So that is an area that people are focusing on, really. But in terms of being excited on any issue, the insurance law, the new act is one area that people, though, are ignoring, not in the same manner they're weighing the tax issues. But you see, that area is one that people should pay attention to. It is not a cost. It's actually a strategy. However, what we don't actually understand or believe in is if the insurance companies themselves are, I want to use the right word. In the Nigerian terms, we don't actually believe in the insurance companies. So that's why a lot of people don't insure. But for me, we advise a lot of our clients to make sure they insure their properties against any of these perils that come through. What this area has focused on is more disaster, which is the ethics part where buildings collapse. That's not a problem. If the engineers and all the industry get the right people, buildings will not collapse. One of the biggest problems we have, and that's an area I think the reform should focus on, is title insurance. That is our biggest problem. If we can get title insurance, we will do more transactions. People will not move into transactions and move back when they feel, especially where issues like Ajagbadi come up. Nobody's going to go there. Because if it's not BAPT, I can't see it. But if it's title insured, people will go. They will have confidence in the market. So those are the areas. Some other areas is the rent insurance, where clients, and this insurances exist in other climes. Where you have rent that has been paid, you have it, the landlord takes an insurance out to make sure that if his tenant gets into a bad shape, he's covered. Those are the things we want to see. It's a progressive market. We want to see those things happen in our market. Reform is good. Reform takes your market to maturity. And that's what we're saying. And I agree with Dr. here that if we start from where we are, the gaps will be filled. We recognize some gaps and we start working towards that. But where we are now is that we're insuring against fire peril. Now we're insuring against construction collapse and all of those things. For business, we want continuity. We need to start insuring against business continuity. Cash flow must not stop and businesses must not be disrupted.
Okay, thank you. Thank you very much. Can we give him a round of applause? Looking at property sector specifically, things like office, retail, residential, what are people currently investing in, and what's your guidance for the clients that you're advising?
What we've seen is that short-let seems to be the most interesting thing. Every property wants to be short-letted. Well, and that's where it is. But then I don't advise people to go into that. It's a very seasonal one. In terms of sector areas, the logistics and e-commerce is one that is rearing its head. It has been for the last 10 years. And I think if you notice what has been happening along the Shagamu belt, that is what has been driving the development in those particular areas. Office, commercial space, not technically exciting because the rents have been stagnant for a long time. Investors here can bear witness to that. We've not seen yield growth in the office sectors in recent past. So not many people are remaining in that space. Earlier on, that was where everybody was pointed to, but not much investment is going in there. Mid-level residential is increasing. First, that is the highest turnover area. And a lot of developers, as we've seen, a lot of JVs happening in that space. Luxury property development also on the increase, but investment in that area is tapering down because of void. They're not selling so much in that particular area now. So if I was to advise anyone to where to direct to, mid-level residential sector is a good investment class area, and logistics and the distribution sector warehousing and all of those things. Definitely an area to look into.
On the topic of rental increase, like you mentioned, there's been a pretty flat movement in the office sector. With the rents in the residential sector, things have really shot up over the past year and a half. What perspective can you give to occupiers or landlords to, I guess either alleviate concerns that my rent is too much, or just provide some empathy for the landlords? What's your position on the rent increase?
So yes, rent has increased, as we can see clearly. But it has nothing to do with the right fundamentals. Nothing. But more to do with what I said here. There's been FX changes, inflationary movements, replacement cost has gone on the increase. So people have adjusted to that. What really drives income? What drives rental is income. We do not have sustained income to support what we're seeing now. So if the rents keep increasing at the level that they are, and we have to also look at it that where is this rent going? Is it yield or is it inflated income? So I used this statement on a program I was on 3 weeks ago that price is not value. So rents have gone up, but has value increased? Technically not. Can we sustain the rental flow? Rents will still go up because of inflation, which means that replacement cost for the investor, landlord, is also going up. So he has to adjust. So what usually happens, there's an average 5% yield, technically, that happens. So if replacement cost goes up by 20%, rents will technically adjust to a 5% margin just to keep the float going on. So that's why we get to this point that we see rents have gone to where they are. Astronomical figures. But if we go back to inflation figures, at 28% earlier in the year, it has just adjusted. It's coming down now, and we hope that what would happen, rents will not come down. They will just stay like the FX, stay in one place for a bit. All right? So unless people don't come again into the market, and we did another research that shows that Lagos gets about net inward migration, 500,000 people every day. They're not going to Ajagbadi. They're going to Lekki. They're moving out of VI because that has been... So those areas will be pressured. And the rents will keep going to a point whereby those vacuum will be taken up. So going back to the question we say is that rents are now increasing because income has come in and demand has increased, but the deficit within the market is showing up, and the rents have to meet the replacement cost challenges.
Thank you. So just for closing statements, I'm going to ask, given your respective industries, what would you be recommending to contractors, developers, real estate service professionals in here? What action should they be taking for 2026 to prepare? Given the insurance, real estate services, tax, consulting, and macroeconomic advisory, what would you be advising us?
Okay, I would like to consult my book now because this one is highly technical before I go and shoot myself in the foot as far as your other industries are concerned. With the insurance industry, I have said what I want to say in the sense that I say that the companies have become stronger because of the recapitalization that's also taking place that has a deadline. That means that we have a depth and we have a higher level of capacity. And then we also have a lot of inflow as far as overseas technical capacity is concerned, as well as financials. So as far as that is concerned, there's an increased investor confidence. But when it comes to the construction and structural, that industry, I wanted to say something that, construction firms, they should embed 3 major insurances: the construction all risks insurance, the professional indemnity insurance, as well as performance bonds, because you can actually call on the bonds. These bonds are very, very critical to any company that you have either subcontracted to and has not been able to perform. So the bonds can be called upon, and then in another aspect of it, there are some very, very high risk ones, like when Dr. Adedipe was talking about the political terrain that is shifting. I would say that when you're asking people to promise projects, just because you want to see some degree of tangibility, those projects are high-end projects like roads and stuff. So they need to actually be supported, by insurance and then the construction. And then you should also adopt a lot of maybe project financing is something I would say for the construction industry, and then adoption of technology and sustainable standards. Now, for the real estate industry, I would want to say this, that there should be some degree of institutionalization of the property risk management. This is very, very important because the professional risks are involved in real estate. Then there's the formal documentation of a lot of the assets. They should be formally documented, and also increased property valuation. So we can start from the bottom or we can start from the top. You can start from the bottom by saying things like all estate valuers, those ones that have NIESV stamp. You can start from the bottom up, because from there you can actually approach, a lot of the landlords that are in your portfolio and sort of like maybe educate them on the necessity. Or we can start from the top, and the top would be from the government, as it were, imposing it on everybody. So you can either start from the bottom or from the top to institutionalize it, and then digitalization of all the records. Because when the records are digitalized, there'll be little loopholes and gaps. As we have it now in the insurance industry, if you say, for example, have 20 staff members, you cannot go and pay for your pensions and have 19 staff members. So the PENCOM, the group personal accident, the group life insurance, everybody is across board. And as we speak, a lot of those parastatals cross each other and compare their data. So if you institutionalize the data management aspect of it, as far as the structural, the real estate industry is concerned, that would be a great help. Thank you.
So let me just speak to the room, and I say that the reform of this current government is working, and I say it's working when I look at real estate, what is happening into real estate. The preceding years, 8 years, 2015 to 2023, was stagnant years. If we look at the construction books and what was happening, there was not much happening. If I ask HC now, between 2023 and date, how much work has happened, how much approval has gone on, we can see the difference. And again, despite what I say, rents have gone up, not sustained. Every landowner today, I always say, you're a billionaire. And these are the shifts in the market that has happened. But this is not the end. So I expect to everybody that we are looking at good times in this market. What I've always said we are missing is regulation to make sure that our risks are mitigated. And with these reforms that have come on the tax side and on the insurance side, and furthermore that are coming up, even with the government, the subnational states governments, means that those in the real estate sector are in for a better time. And I am looking forward and advising clients to go into investment property. Go into this thing, because really that is really where the wealth defense is. There's no need to be scared. There's no need to be worried about it. And I always say, again, don't worry about the issues of land grabbing and all of this. It does happen, but there are areas how we can mitigate all of these things. And this particular sector, the real estate sector, is one that everybody should be involved in, not technically as a shelter, but as an investor. Thank you very much.
I'll take a cue from the other panelists and also say that government has a significant role to play in the real estate sector, and particularly around title. I think that theme has come through. When you look at economies that have really prospered, I was reading that book, Why Nations Fail. One of the critical elements in there is, title. right? And when we talk about what is government doing to stimulate the economy, I think that that's an area that the government has to play in, and ensure that we get our society to a level where if you go request a debit card, it will be posted directly to your residence. That's the ideal world. When you get that right, then all the things around insurance will just play in as well. Now, from a tax perspective, my advice to businesses is essentially, number one, your finance teams have to be reskilled and retrained. Because I'm a tax partner. I've done tax for 22 years. But I tell people that there's no difference between me and someone who just joined PwC, because we all have to read the rules from scratch. So it's an opportunity for them to learn faster. The only difference is actually experience, right? So, one of the legislation is more than 400 pages, and there are 4 of them. So you have to train your staff to be able to avoid penalties, because penalty is going to be the big issue for those who comply. Those who are already compliant, the fact that they just don't know how to comply could just be the difference between them paying an additional tax bill. For example, non-deduction of the right amount of withholding tax can cost you like 40% penalty. Not complying with e-invoicing can cost you 200,000 per invoice, and so on and so forth. Or another one, transacting with someone that has no tax ID. So maybe you invite someone to come and be an MC in end of year party, and you're paying the person 2 million naira as MC. You haven't spoken about the other performers, and you do not get the tax ID from that person, because what government is trying to do, use you who are compliant to bring others into the tax net. The penalty for that is 5 million. So the person you were supposed to be 2 million, your penalty could be 5 million. So your finance guys need to really be skilled, trained, and be able to manage that. I think the other thing which I wanted to mention is around the importance of tracking what is going to happen going forward as well. So many of the data that government is going to get, they may not know how to use it because it's big data, and they need to put infrastructure in place to be able to use it. But as things are progressing, they'll be learning, and they'll be issuing guidelines, regulations, and so on and so forth. So it's important to track all of that as well to keep abreast. So those are my advice to businesses.
All right, so thank you very much. Mine is just a line, and that line goes this way. Now, when your mind is trained to see opportunities, you don't surrender or succumb to problems and challenges. So this is a kind of poster towards that we should focus more on opportunities and pay less attention to challenges and problems, things government is not doing. Rather, look at where the opportunities are and then design your own strategic initiatives to expropriate those opportunities. That would be my final line. Thank you very much.
Okay, thank you very much, everybody. Hold on, let me.
Please, a round of applause. I think they've done a wonderful job. And we just have time for 2 questions. One lady and one gentleman. The lady in the glasses, please. Can we have a roving mic? We should be out of here before 1, so we are really conscious of our time.
Good afternoon, everyone. My name is Estate Surveyor and Valuer Tolu Dimakoje, MD at Kola Commodity and Company. And I have 2 questions. And the first one goes to the taxman. Hello, sir. Thank you so much for elucidating on the gaps for us. But I have a question that's come up a couple of times. So for some of us, let's say SMEs that are under the 100 million naira threshold, and on that premise, they've not been charging VAT, because we had this issue a couple of years ago. So we were not charging VAT, but within the tax year, you said goal of 150 million, 200 million, and you've not been hitting it, but this year you hit the jackpot, you hit it. Now, how do you reconcile taxes or VAT that you've not been charging prior to that time, because the previous years you had been within that threshold? That's question number one. Question number two goes to Madam from Peak Trust Insurance. I want to lend to what my mentor said about insurance. We've been pushing insurance for a lot of our clients, but what we've noticed is that where their heart is really is their rent, understandably, right? So, and we've been talking about insurance for renters. I'm not seeing any conversation along that line. Yes, we're talking of building collapse and all that, but like my mentor said, they're extremes. So titling insurance and rental insurance, I would really like if you could speak to that and maybe talk to us about how soon your brand might be taking that up. Thank you.
All right. I knew I wasn't.
So we'll take all the questions so that we can be more efficient with time.
Aminu Sharafa is my name. I work with Affiliate Properties. My question is for the madam, the insurance. You said something about construction risk or risk insurance. Okay. So I want to ask, now there is a policy that a company must do, especially the construction companies. If, for example, you have a construction that is ongoing and then before you start, you procure that policy, then after the construction, nothing happened, because as a contractor, you know that you need to mitigate all your risks to make sure that nothing happened on your construction. And at the end, nothing happened on your construction. That's first year. Second year, maybe in 2024, you did something like that. In 2025, you did something like that. In 2026, you did something. And you are now having a track record of nothing happening on your construction. And you continue procuring this insurance bond. Okay. I want to ask, will there be any return of premium from this insurance company to the contractor? Okay. That's number one. Then number two, you also mentioned something about a project that is being financed. Okay. Maybe APG project being financed by bank. Okay. So as a client, I approach bank A. Okay. Let's say UBA, for example, and I say, okay, I want this amount of loan. So it is mandatory for that client to pay 1% insurance bond. Okay. So for that, I acquire that insurance bond from you, for example. And then my contractor will also pay another all risk insurance to you guys as well. So I want to see, don't you think the money that I will pay the contractor is coming from that loan? So how will you try to reconcile the two? Thank you.
All right. Thank you very much. Please, over to the panelists.
Okay, since I appear to have more questions, I'll take the questions as I receive them. The first one is on rental income and whether there's an insurance on rental income. Yes, there is insurance on rental income. The major thing with the rental income is that this kind of due diligence that the landlord will undergo before the landlord gives the property out for rent is going to be a very similar due diligence that the insurance company will undertake, because it is important for you to be able to sort of say something similar to, this is where the person is working and this is the salary that the person is earning. And it is based on that you have the degree of confidence to be able to give out your property to somebody for rent. So that's a very, very similar due diligence that the insurance company will undertake before they give the rental income insurance to the landlord. Now, the issue that is on ground is this: have insurance companies built up a strong enough portfolio in that specific area of the market. What I would say to that question, because I'm the one posing the question to you or to myself, is this. When it comes to to use an English that has many C's and many T's, something that is very, very specific. What happens is that the insurance companies has a portfolio that is enlarged. Their portfolio is not built up on rental insurance alone. Their portfolio is built up on various insurances that are incidental and tangential to real estate insurance. So what you see is this. When the policy document is drafted, and by the way, that is the reason why you would need a broker. Okay. So when the policy document is drafted, it is important for the small print to be read. I dare say that is very, very critical. The insurance company can provide you rental insurance. Peradventure, that person has a challenge with his job and has lost his job and cannot find the job for the next 3 months to 6 months. That is doable. And then we'll draft the policy in such a way that the landlord will be covered for that. And then, of course, even that person who has a job and has lost the job, there is insurance for that kind of loss of job insurance. It exists. You just need to speak to the right person. Thank you very much. And I hope I have, answered your question properly. And for the gentleman who is talking about the bond in terms of the 1% for your bond that has been paid to the insurance company, and then what you didn't describe well is the one for the subcontractors. In other words, your subcontractors also are supposed to have a bond for you to be able to include them in that kind of huge insurance. Yes, they're supposed to have a bond, but it has to be worded properly. I go back to the issue of wording. There is the advance payment bond, there is the performance bond, and these speak to different aspects of the project. So you need to be able to understand precisely what you need. We really haven't gone to the extent of drafting bespoke bonds, for example, for the construction industry. But I do have one at hand now that is actually bespoke. In other words, it is specific to that engineering company. And because it is supposed to last for 12 months, I have advised my clients that, you know what, why don't we extend it and let it last for 24 months? What is going to happen is this, which speaks to your second question. You keep paying insurance and keep paying insurance, and then you now don't have a claim and then keep paying insurance. Now, the issue is that while you were paying for the insurance and you did not have a claim, somebody else who had been paying for insurance does have a claim. Now, you are in the same industry. Now, are we now to say, because you haven't had a claim, we should not settle the one that has had a claim? The fact remains that we can't afford anymore to be myopic. The construction all risks insurance was not drafted for company A alone. It was drafted for an industry. And the fact remains that you didn't have any claim for 5 years. True. But somebody had a claim every year consecutively, and we have been meeting it. So I want us to be a little bit more open-minded as to this. And if you so desire, we can now incorporate it in your policy that if you do not have a claim consecutively, this is the amount of your premium that will be investment based. So, pardon me? So thank you so much.
Okay, we have
All right. So, so for the SME, so the old law actually says if you make 25 million turnover or expect to make 25 million turnover, that language is not in the new law. It just says that if you're 100 million turnover, then you're a small company. So effectively, it is now a question of fact. at what point in time did you meet that 100 million? So if your year end is December, maybe in October, you didn't expect. So you've been a small company in 2024, and then you come into 2025 for sake of argument, assuming the law was already effective in 2025. So you were a small company when you started in January, but in October, for example, you had one transaction and it got you to 100 million. From that transaction, there's an expectation that you begin to charge VAT. The tax authorities, even though they have not come up with any guidelines to clarify this, from a legal perspective, should not go back and say, for the transactions up to September, you should have been charging VAT and remitting VAT. So it's a question of fact. But in 2026, because your turnover in 2025 was more than 100 million, then it's assumed that you should be charging VAT going forward. Yeah.
Can I have a round of applause for the panelists, please?
Thank you very much, dear panelists. So you can please go back to your seats. We'll still call you back for the plaques, but in the next 5 minutes, we will be welcoming you back. So we are about rounding off on today's program. But before we call on the president and the chairman of council to come and say thank you to our speakers, we just want to go over the video presentation of our remaining sponsors. Without them, we couldn't have had this much fun this morning. So we'll take UPDC, we'll take Alithia, and we'll take Lang & Company. Thank you.
For almost 3 decades, UPDC PLC has been at the forefront of Nigeria's real estate evolution. We have redefined skylines, created thriving communities, and built spaces where people live, work, and dream. From landmark estates to mixed-use developments, our legacy stands tall, built on excellence, integrity, and innovation. As our cities expand and populations grow, the future of real estate lies in creating new towns, planned, connected, and sustainable communities that power economic growth. At UPDC, we have taken this bold step forward with Brompton City, our newest master plan lifestyle community. Designed to embody the next phase of modern living, Brompton City integrates work, leisure, and nature into one harmonious space. It's a reflection of our enduring promise to create not just homes, but holistic environments where people and businesses thrive. A city within a city curated for connection, comfort, and community. From the foundations we laid decades ago to the new towns we're shaping today, UPDC remains the heartbeat of Nigeria's real estate journey. We continue to build with purpose, transforming land into legacy and communities into lasting impact. Because when we build for generations.
Everything starts in our factory, from the raw materials to the finished insulated roof panels, and every stage is met with strict quality standard.
Our insulated roof is designed to drastically reduce heat penetration, increase energy efficiency, and the lifespan of the building. Ideal for commercial, industrial, and residential purposes. Insulated wall panels complement perfectly, lightweight, strong, and engineered to deliver excellent thermal and acoustic performance across different building needs. If you are looking to build smart, faster, and more sustainably,
Large & Grand Commodities is your trusted partner.
Come and let's build the future together.
So the first amongst the honorees will be our Honorable Commissioner Honorable Maruf Akinderu Fatai. Please encourage him with a round of applause. He did justice to the topic. He's a very busy man, and we are thankful for his presence at today's event. Thank you very much. Thank you. The next awardee is our keynote speaker, Dr. Biodun Adedipe. Round of applause. He is the expert and a frequent speaker at Nbcc events. Thank you very much. The next awardee is Mr. Kenneth Erukume. Oh, he has stepped out. Okay, so I would like to call Mrs. Abimbola Onokumaya. Apologies. Onokumaya. A round of applause, please. We are all insurance experts. All thanks to her and her presentation this morning. Thank you very much. Thank you. Next, we have Mr. Dolapo Omidire, our ever-able moderator. He did a fantastic job in moderating the event. Thank you for your time. We do not take it for granted. We have Mr. Benga Ismail. Round of applause. The real estate expert. Extraordinaire. A round of applause for him. Thank you. Then very quickly, we'll take our sponsors in no particular order. Do we have a representative from a co-development company? Thank you for your patronage. Thank you very much for your sponsorship. Maybe you gift our president one of your buildings in Missouri. That would be fantastic. You give me one too. Thank you. Okay. Mr. Kenneth Erikume, please come for your plaque. Thank you very much for your expert opinion. Thank you. Do we have representatives of STB Mortgage Bank? Do we have anybody from STB Mortgage Bank? Please come forward. Thank you very much for your support and your patronage. Thank you very much. The next awardee would be Knight Frank. Knight Frank. Please, a round of applause for Knight Frank for their unwavering support of the chambers. Thank you for your support. Thank you. UPDC. Do we have a full delegation from UPDC? Our Chief Commercial Officer, please. Go and do the honors. Thank you very much, UPDC, for for your ever-standing support. Do you have any representative from Alithea Capital? Okay, we don't. So thank you very much, Chair, President and Chair of Council. Thank you very much. So we've come to the end of the program, but we shall not leave without having the vote of thanks. But before we do that, we do the official photographs. So once we do the vote of thanks, we can have our networking session. So all the speakers, please, you are welcome back on stage. Mrs. Onokomaya, Mr. Kenneth, Dr. Adedipe, the Honorable Commissioner, please don't go yet. Mr. Benga Ismail, Dolapo, Dr. Akim Mukuniro, please, we need you. Need you in front. We'll make it very quick and snappy. Mr. Akio Patola, FIAPSI, please. Thank you. Thank you very much. Thank you very much. A round of applause. Okay. Mr. Deputy President, Ashiwaju, you are needed in front. Please, Honorable Commissioner, and the members of the council here present. Please, one last photograph before you go, Honorable Commissioner. It won't take more than 2 minutes. Okay, other council members here present, ESCO members, Mr. Opala, and any other council member, ESCO member here present, please join us. I think we're done. Thank you very much. Thank you very much for your time. So I'll quickly call on the Vice Chairman of the Construction and Real Estate Committee, Mr. William Opala, to give us a very brief vote of thanks. Thank you. A round of applause for him, please.
Good afternoon, distinguished gentlemen, ladies. I have the privilege in giving the vote of thanks. But first of all, I still have a question for the tax man. Is this: is it possible for us to discuss with our insurance people to cover tax liabilities at the end of the year, so that we have the tax man and the insurance man having discussions while we focus on our core? Thank you. Okay. As we draw the curtains on this insightful edition of the Nbcc Construction Real Estate Outlook 2026. It's an honor to express our deepest gratitude to those who made today's dialogue on navigating reforms and driving resilience possible. To our visionary speakers, our sincere appreciation goes to our keynote speaker, Honorable Maruf Akinduru Fatai, the Honorable Commissioner for Housing in Lagos State, for providing the critical government perspective needed to navigate the year ahead. We also thank our guest speaker, Dr. Biodun Adedipe, for his masterful breakdown of the economic indicators shaping the future of Nigeria's construction real estate sectors. To our expert panelists, a special thank you to our panelists for truly robust discussion. Mr. Benga Ishmael, for his seasoned insights into the professional standards of the industry. Mr. Kenneth Erukeme, for demystifying the complex world of tax reporting and strategy. Mrs. Abimbola, for highlighting the vital role of insurance in building sector resilience. And Mr. Dolapo, for moderating and anchoring the panel session. To our partners in progress, events of this caliber are only possible through the unwavering support of our sponsors. We extend our heartfelt gratitude and thanks. Echo Development Company, Knight Frank Nigeria, STB Mortgage, UPDC, and Alethea Capital Limited. We also acknowledge our patrons, ESCOs, council members, as well as the Construction Real Estate Committee and the Nbcc headquarters team, whose behind the scenes dedication brought this vision to life. Looking forward, please kindly mark your calendars. The conversation doesn't end here. We invite you to join us for upcoming flagship events. Sharing experience with Dr. Segun Ogunsanya. Join us on Thursday, February 19th, to discuss transformational leadership. Meet the Minister, a breakfast dialogue on Thursday, February 26th. Nbcc HSC Week and Health Walk, taking place from March 2nd to the 7th. International Women's Day, celebrating on March 12th. Then our Trade Mission BCC Global Conference, scheduled for March 25th to the 27th in the UK. Now, if you're looking for a venue that matches the prestige of your brand, the plaza is officially open with state-of-the-art facilities at affordable rates. I repeat, affordable rates. It is a perfect home for your next seminar or corporate event. Please reach out to the Chamber HQ for reservations. If you aren't a part of this thriving community, we invite you to join the chambers today. Visit the registration desk to meet our membership team or sign up on www.nbcc.org.ng. Lastly, stay connected with us on our digital platforms, Instagram at nbcc/_ng and our LinkedIn for future updates. Thank you all for your presence and contribution. Safe travels to your various destinations and have a profitable rest of the day. Thank you.